folks. Welcome to Capital Mind Stock Outliers. I'm going to just do a video on a regular basis that talks about a different set of outliers that we're recognizing in the tool. So if you go to data.capitalmind.in and click on our stock outliers, we're going to see a bunch of stocks that have different grades. One of the ways to look at this, the easiest way to look at this is that we have a bunch of companies that come through into our outlier section automatically after being run through our algorithms. There are multiple reasons why they come in currently. All the reasons that we are looking at are technical. We've got breakouts, we've got MACD bullish or volume shocker with a price increase. And there are reasons why stock comes in. For instance, VA Tech Wabag has come in because it's an all-time high 2 days of the last 30 days continuously, and we've got MACD bullish as a crossover with volumes greater than 4 times 20-day moving averages. You can see this in a small chart on the right hand side. You can actually see this looking through, so you get a quick view. If you want a larger chart, you would actually click on the company name, which gives us more details about the company, which is a page that's evolving, and it'll come in the next few days as bigger. So you can see the chart evolve as we go on. It's just turned MACD bullish, um, as we might be able to see. There's some errors over here, but we aren't able to see the full chart going forward. But what we're also going to see in by looking at this is also capital mind charting, which we can see VA Tech Wabag. This is a technical chart with Bollinger Bands and a MACD. So you can see MACD turning bullish here at the bottom. And we've got VA Tech Wabag just crossing out into a breakout zone. So we've got a very interesting chart over here that comes in. If we look into screener.in and type VA Tech Wabag, which is the name of the company, you see that its P is 45, so it's not necessarily cheap. This is a company that has an interesting set of competitors, all of them whose P is lower. Uh, we don't know if this is the exact set of competitors they have, but largely it's in the gas business, and that its quarterly earnings on the EPS side aren't looking very interesting because it was 21, it's down to 13. From 44 crores of EBITDA to 32 crores. So, sorry, the net profit is down a little bit, and we got an EPS that's down. So we don't like this company per se. Looking at trailing 12 months, we see December quarter 111 versus 113. Trailing 12 months for March 14. Even then, it's just about 10 or 15% increase. 45p for this company, unsustainable in the longer term. This is just a preliminary analysis. You want a momentum breakout stock to make excellent profit growth and it to be largely unrecognized. One of the other breakouts that has been ridiculous has been Wokhart. In fact, most of the outliers we're seeing nowadays are in pharma. So you got Aarti Drugs, we've got RPG Life Sciences, Shasun Pharma, we've got Bliss GBS Pharma, which is a small cap pharma name. You got um, so Cadila Healthcare. So there's a number of pharma players. They dominate the outlier space. Almost all of them are on breakouts. We can see them just by looking at it over here. So Wokhart, for instance, is a large cap pharma space. We'll just go to our charts and just type Wokhart. It automatically comes up. Just have to click it, and then we can see this chart. This is almost ludicrous as a chart. It's just continuously going up, and this is MACD is just not gone bearish. It's not even touched back into the 20 DMA. Very, very bullish stock. Let's look at um, um, what its P is like. It's again a 46p. Has it delivered results of that magnitude? Let's look at quarterly results. We're talking a massive increase, but again, it's only about 15%. We're talking net profit goes from 304 to 347. That's only about 15% profit growth. It's been an excellent quarter. I think the December quarters are really, really good. We got 427 in the December 2012. Longer term returns look okay, not fantastic. We've seen December 2004 to trailing 12 months of 445 crores, double. That's not very exciting. It's in fact fallen a lot from March 2013. The only reason you'd buy the stock is because every single pharma stock is going up, and this is going up even higher. Some of the stocks that look interesting, and we've tracked Aarti Drugs before, and Aarti Drugs continues to be an interesting player. So let's look at Aarti Drugs from the perspective of this. It's a 23p, considerably lower than some of the other players in its space. Probably one of the lowest other than Aurobindo Pharma. Aurobindo Pharma, by the way, is another great stock. We are looking at quarterly results here. You see that December 13 to December 14, we are talking about an increase of approximately 70%. 11 EPS goes to 18 or 19, 70-75% increase in EPS. We've seen a fairly steady growth. We've got an 8x increase in 10 years on profits. In fact, from March 2014, 12 months, we're already seeing a trailing 12-month increase of about 25%. So the EPS growth is justifying the PE. We're seeing 23 PE, 25% at least on an EPS growth, and probably looking stronger. So if you look at the last 4 quarters themselves, we've seen increasingly strong EPS growth. So Aarti Drugs remains a very good player. Um, you could check the charts as well if you look at Aarti Drugs and um, some of the things that come with it. Again, it's a very strong stock resting on the 20 DMA. An entry into this would probably have to retain itself at the 20 DMA as a stop loss, which at 1553 is talking about a 1345. So 200 rupees stop loss. That's about 15 to 18% on it. Well, 12, 13% on it, which is not too bad as a stop. Look at the volumes here. The volumes are fantastic, growing, and doesn't seem like this whole story is going to end. But when every single pharma is going up, stocks going up, it's almost like it would be bad to not stay in that sector. And unfortunately, in Capital Mine Premium, we took on a different track and we took out PC Jeweler, which luckily is part of our outlier setup as well. It's a mid cap. It's gone up a little bit today. It's broken out again, hit an all-time high 5 days out of the last 30. It remains a strong outlier. It's done this for a while. Look at the charts. It continues to be a very strong player at least on the charts. It remains here. You've got a MACD that looks like it's going to break down, but I think if we retain a 20 DMA or even further down below as a stop, so you want to see the last low broken, that last low is a 250. It's still a far distance away from breaking through a stop. So we'd kind of stay there and say, well, let's see where this goes. Looking further, the next sector that looks very interesting here is, if you look at it, there is companies. BML, which is one of the Capital Mine Premium stocks, is still doing well. It's broken through into a 52-week high. 3 days out of the last 30, you got a bullish crossover on MACD. Continue to retain that. Um, one sector that's starting to look interesting, apart from pharma, is FMCG. You got Zydus Wellness at one point. So Zydus Wellness has an interesting chart. You've got a new high coming in, and you've got a very strong MACD performance, reasonable volumes, and the stock starting to break out. So this looks interesting. How does it look on the charts? We've got a fairly good handle of things here, 32.37. That's not too bad for an FMCG stock. Most of these stocks trade above 50, typically because they have no debt and very they're very cash flow positive, free cash flow generating. We've got a company that's now doubled profits in the last year, 26 to 44, not double, but well, gone up nearly double, 6 rupees to 11 rupees. We've got fairly good annual results going. This company has gone and grown in the last 10 years 55 times, or 50 times at least, and it's even higher by about 15% than March 2014. So we see that maybe this company is probably looking at growing faster. This is 32p, so you would need a 30-40% growth for it to sustain. Looks interesting from a FMCG perspective. We own Imami. Zydus Wellness does not look bad as a stock to own. It's on the radar. Uh, we've got a couple of interesting stocks that continue to remain. The Talwalkars, you don't like it. It's an interesting stock, but the financials don't look so great. There is Bliss GVS, which is an interesting small cap in the space. If you look at Bliss GVS's results, although it is been a rank outlier, it's still at a 24.5, 25 P, which is much lower again than the bigger products. This is more an FMCG player than it is a pharma player because of what it does. It's still a lower PE company. We've got uh, net profit growth of 17%, but it's been volatile. We've got one crore in the March quarter last year, so obviously the growth will look excellent. But it seems to have been coming back. We haven't done the analysis, a deeper analysis. But what Outliers really does is helps you discover stocks. So once you discover it, you can say, okay, this looks interesting. Let's go back in and discover some more. So you got a trailing four-quarter P that involves this March quarter, which was terrible. And almost all March quarters seem to be terrible. So they may be backloading their taxes or backloading their expenses. We've got an operating expense level that's more, so it's not taxes, it's not interest, it's not depreciation. It really isn't even taxes because taxes are lower. Something in the last quarter makes their operating profits fall. We've got to figure out what that is, and perhaps that is something that will change the view on the stock. However, this is being a small cap may just be breaking out. We seem to have a fairly good again handle on growth. We've seen a very stagnant last 3 years, and it will go into trailing losses. Um, sorry, trailing profits, we've got about 53%. Interesting, but we'd like to see this trailing 12-month compounded profit growth to be slightly higher. We've got a great number in 10 years, but the last few years haven't been that exciting. So while this remains a breakout on the charts, we don't see this as a big, interesting story. So you would leave that out of a discovery list and say that, well, it's growing, but let it grow. It's growing only because everybody's investing in pharma. If we further go down, the 3 to 7 outliers are the best. There's Procter and Gamble, again FMCG. We've got a number of other players here that are interesting. The soya protein has been a breakout range for a while. However, while it has been above the upper Bollinger Band, it's not showing a new high. So if you look at it at some level, this may give you a different picture of an outlier that is not making an all-time high. So we don't like this stock, to be honest, because you know if you look at it, this is just a stock that seems to have fallen, lower circuit, lower circuit, lower circuit, and then it's starting to rise up. It's only now breaking out from MACD. Having said that, this is not a great stock to invest in right now. It may only be a short-term mover. So if you were to zoom in a lot, you might get something that looks interesting. And again, here this is a low volume stock. We're talking 13 million rupees. That's about 1.3 crores. So it's not really all that great from a stock perspective. There's also a few stocks that look very interesting. Granules, again, a pharma player. Granules, the chart looks excellent. It's a brilliant mover. It's just reached a new high just now, today. So this is a breakout with a gap. These might provide a layer of support that says if it broke down below the gap, it might still be a player that we'd like to look at. Granules has an excellent set of numbers as well. It's just a 20p stock. Again, sector where P's are typically higher. We have Sun Pharma and Lupin at the 34, 35 levels. So what is this company doing in terms of net profit? We're fairly seeing a ordinary set of moves. So you've got 21 going to 23. That's just a 10% increase. We've got top line increasing by about 10%, 10 to 15%. Operating profits up about 10 to 15%. So at best they're losing out on depreciation, but nothing more than that. So it's spectacular from that perspective. But having said that, trailing 12 months show 92 crores of profit versus 75 last year till March. This is only till December. So we're talking 75 to 92 is about 20%. So EPS growth over the last few years has been good. Trailing 12 months is 44%. profit growth, and you can see the numbers look pretty good here. So 32, 40, 53, 43. We're talking fairly good results for Granules India. So given the fact that it's a lower PE, the stock, the entire sector is being related, that's pharmaceuticals. We look like this might be our next set of, top among our next set of choices. On the FMCG sector, you got Pidilite that's looking really good. Pidilite just doesn't seem to stop, right? It keeps going. So you look at Pidilite's chart, it just has grown continuously for the last 1 year or so. So in fact, looking from 2014 Jan when it was just 283, it's gone to 622. It continues to make new breakouts. MACD looks good. Volumes look excellent. This looks like a stock that you'd bet on because in the end, no matter what you do, you still need some Favicol, right? So that's our story on the capital mine outliers front. This was just the bullish outliers. We aren't going much into the bearish outliers. More on this in terms of user interface will come out. We will be adding more. Check out data.capitalmind.in if you like it. Give us some feedback on the Google group. We will add a feedback layer to this site very soon and change the UI so that it's a little bit more easy to use. You can only look at large caps, for instance, just by typing large cap here, and you'll get only large caps in this entry. You'll see Aarti, Infratel, Apollo, Pidilite, Oro Pharma. Oro Pharma has been doing really well on the charts. Uh, what we'd like to see is how you use this. We've been making money on it on the Capital Mind portfolio. We hope you can look at it as well and tell us your feedback and tell us what you think. Thanks very much for watching.